Hello everyone, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for February the 23rd, 2011. Now, our first trade for tonight is going to be in the US-Canadian pair. Now, certainly we have some volatile markets. That would be an understatement at this point. Despite the fact that we've got crude oil moving aggressively higher towards $98 a barrel today, the US-Canadian pair has been unable to breach this key 98 level, which I'm drawing in right here. Now, clients of my own, I've been recommending longs on US Canada for about the last week and a half. They're moving into the money nicely now. Now, what I want to point out here again is that I suspect a much bigger player is protecting the 98 level, possibly options players, or even in the Bank of Canada, because they're well aware of the fact that if this 98 level gives way, there's going to be a drastic move lower. And the Bank of Canada does not want a stronger Canadian dollar, and they certainly don't want a free fall effect where the US Canadian pair goes back down to the 90-cent mark, much like it did 3 or 4 years ago, which was a dramatic move, which really hurt. Now, our other indicators here we're going to be putting on a number of different indicators here to see if we can actually get a signal here as to what's going on with this particular pair. Now, to start with things, we're going to look at the short-term crossover. The medium-term crossover, to clarify, is not crossed over. The short-term has. Now, this, along with this short-term predicted difference, is broke above the zero line. The predicted MACD and the predicted true strength indicator are both getting ready to cross the trigger. Now, what I also want to do here is put in the predicted high-low range from Vantage Point. Now, looking at this, you can see that this bar to the right here is showing our next day high and our next day low. Now, looking at the predicted high and predicted low, we've had a break of the low. This was about 2, 4, 6, 7, 8 trading days ago, but since then it's stayed contained inside this range. Now, another key thing I want to point out here is that on the close today, we've closed above all 3 of the Vantage Point predicted moving averages. Now, looking at this, we haven't closed above it by much, but we've closed at 99. We've closed above. Our 3 predicted moving averages come in at 98.70, 99.73, and 98.95. So you can see that they're all basically stacking up on top of each other. This suggests the potential, I'm going to stress that here, respecting commodity prices, because the CAD is very highly correlated to commodity prices. I'm saying that there's a very good possibility that this could break much higher. So for tomorrow, we've done some pretty good analysis here. We know that in the short term, the US CAD is likely to move higher. We're still in a substantial downtrend. This is the second day, I might add, that we've got the neural index up. So for tomorrow, we've got 98.52, 99.39. That's what the range we're dealing with. So we're going to be looking to buy off this 98.52, and I still think it's reasonable to have a stop in the 97.50 area. We're going to be looking at a 1-to-1 type trade. Day traders are going to be looking for 80 to 100 pips. Your medium to longer term traders, though, you should be looking at the one over parity, potentially at the 1.0050 level. That's where I would look for my potential target. Now, the 99.39 area also represents the former base of the overall trend between 99.25 and 108.50. So there is a substantial psychological level here of 99.25, 99.39. But if that level gives way, we're going to see, in my opinion, a very quick move to the top side, despite what happens with commodities and crude oil. And, you know, gold's hanging in there. Crude oil, yeah, I'll leave my opinion out of that, other than to say we have plenty of reserves in crude oil. So whatever's going on in the Middle East, they can keep at it for a little while. But in my opinion, we have plenty of reserves on hand to withstand at least a couple of months of this nonsense without it really affecting supply and demand. That's just my opinion, and so of course you can tell in my underlying tone that I'm suggesting to sell crude oil on that $98 barrel mark. So that's our first trade on US CAD. I've spent a little bit of time, so let's go on to our next trade. Now, this does bring me to my second trade, which of course is light sweet crude oil. Now, what I want to point out to everybody here is this, in my opinion, this move that we're seeing is nothing more than panic and fear and all these different things. And before this really started to heat up in the Middle East, we can see that we had a very clear identifiable trend. We had a base right here. You can see that I've drawn this in right here at this 85 level. We have four candlesticks that have broken below the base of that low point right here, which tells me the primary trend was down. Now, much like my previous statements, it's my opinion that we have plenty of reserves to weather this particular geopolitical storm, and with crude oil moving higher, I see this as a selling opportunity. I don't particularly see it as a buying opportunity, and the supply and demand is not really an issue at this particular point. So with that said, again, I want to point out, looking at the short term, like we're trying to the indicators are trying to catch up to this candlestick. Now, this candlestick, in my opinion, is absolutely ridiculous, and it's the people are going to realize that, in my opinion, again, I stress in my opinion, are going to realize that the crude oil is maybe not actually worth this, and maybe they've overreacted and they should start paring these positions back. And the later into the week that we get into Thursday and Friday trade, that's when this thing could be susceptible to a dramatic pullback. So what I want to point out with this is that, again, the short-term indicator here from Vantage Point, the short-term predicted difference, is dramatically overbought, while these indicators here are somewhat oversold. So for these two indicators to hit this kind of an extreme in such a short period of time, it's almost unheard of, to be perfectly honest. Again, even if we look at this candlestick right here, we moved up. We had a big candlestick up, and then, but you can see that we still gave up the next day 50% of that move. So what we're doing is we're looking to play this short-term move on the crude oil contracts, whether you're trading, I've got it on the continuous contracts here, depending whether you're trading, again, whether you're trading CFDs or whether you're trading a futures contract, you're looking for a potential sell point. Now, on the continuous contract, we've closed out here today. Let's see what we've got. We've hit a high of 94.49, 93.57 on the futures side is the close. Again, we've closed up a huge amount over yesterday. So again, this big move today is likely to be met with potential selling tomorrow or Thursday. So 93.35 is what we've got for predicted high tomorrow. So even with Vantage Point, you can see they're not predicting an overly big run up tomorrow, and we've got a low of 89.25. So for tomorrow, we're going to be looking at shorting these contracts in and around the, again, I would be looking at the a little bit higher in this particular case because I'm using a continuous contract. I would be looking to sell this into the 94, 94.50 area. That to me is a decent opportunity. Now again, we're going to see continued volatility in this contract. On the futures side, again, we'll be looking at the I would prefer to sell this back in that 94.50 area. We're going to probably see a slight extension higher tomorrow into the potentially, I think the Vantage Point is going to be, I think it's going to go a little higher. We've hit 95, 94.49 today. I think tomorrow we'll probably hit somewhere around that same area, maybe 94.80, something like that. And that's the area I would look to set shorts on this, and using about $1.50 stop, because it could run right up to $100 a barrel. That's possible, but I just don't see that likely at this particular point. Once the market realizes that they've clearly overreacted to what's going on in the Middle East. So those are the market positions for February the 23rd. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.